Hello everyone, and welcome to Next Vault. Today, we're diving into a key topic for building a strong and diversified investment portfolio. What are the 5 must-have ETFs for a solid portfolio? ETFs, or exchange-traded funds, are a simple and efficient way to diversify while minimizing risks. In this video, we'll break down 5 ETFs that can help you build a robust portfolio for 2025. Let's get started. What is an ETF? First, a quick refresher. An ETF is a fund that tracks the performance of a stock market index, such as the S&P 500, CAC 40, or even sector-specific indices. The advantage of ETFs is that they allow you to invest in multiple stocks with a single product, offering automatic diversification. They're also lower cost than traditional funds and more accessible for small investors. 1. The S&P 500 ETF. A must-have for U.S. market exposure. The S&P 500 is one of the world's most followed indices, representing the 500 largest publicly traded companies in the U.S. Investing in an S&P 500 ETF gives you exposure to one of the world's most dynamic and stable economies. In 2025, the U.S. economy remains a major driver of global growth. Advantages: geographic diversification, broad exposure across sectors like technology, finance, healthcare, and consumer goods. Historic profitability: over the long term, the S&P 500 has outperformed many other indices. Liquidity and security: extremely liquid, making it easy to buy and sell. Recommended ETFs: SPDR S&P 500 ETF, SPY, Vanguard S&P 500 ETF, VOO. 2. The MSCI World ETF. For global diversification to broaden your market exposure, the MSCI World ETF is an excellent choice. This index includes around 1,600 companies from 23 developed countries, offering widespread geographical diversification. Advantages: global diversification, access to markets in the US, Europe, Japan, Canada, and more. Exposure to high-quality companies: the index features global leaders across various sectors. Reduced volatility: geographical diversification lowers risk tied to a single economic region. Recommended ETFs: iShares MSCI World ETF, IWDA, Vanguard FTSE All World UCITS ETF, VWRL. 3. The MSCI Emerging Markets ETF. For high-growth economies, emerging markets are a vital component of a well-diversified portfolio. This category includes rapidly growing economies like China, India, and Brazil, which offer significant growth potential despite higher risks. Advantages: high growth potential. Emerging economies often outpace developed markets in growth. Exposure to new technologies. These regions often lead in sectors like renewable energy and tech innovation. Regional diversification provides access to economic trends different from developed nations. Recommended ETFs: iShares MSCI Emerging Markets ETF, EAM, Vanguard FTSE Emerging Markets ETF, VWO. 4. The Nasdaq 100 ETF. Harness the tech boom. The Nasdaq 100 index includes the 100 largest non-financial companies listed on the Nasdaq exchange. If you want to invest in technology and future-shaping innovations, this ETF is a fantastic pick. Advantages: tech industry exposure, includes leading companies like Apple, Microsoft, Amazon, and Tesla. Rapid growth: the tech sector continues to expand at a high pace, with immense innovation potential. Impressive long-term returns: while more volatile, the Nasdaq 100 has delivered exceptional performance over time. Recommended ETFs: Invesco QQQ ETF, Vanguard Information Technology ETF, VGT. 5. A bond ETF. For portfolio stability, no solid portfolio should rely solely on stocks. Adding a bond ETF provides stability and helps reduce overall volatility. Advantages: security and stability. Bonds are generally less volatile than stocks, helping balance overall portfolio risk. Regular income flow. Bonds generate consistent interest payments. Diversification. Bonds act as a hedge against stock market fluctuations. Recommended ETFs: iShares Core US Aggregate Bond ETF, AGG, Vanguard Total Bond Market ETF, BND. Conclusion. Building a strong portfolio with ETFs. ETFs are an excellent choice for those looking to diversify their portfolios without handpicking individual stocks. In 2025, a balanced portfolio should include U.S. equities, S&P 500, global exposure, MSCI World, emerging markets for growth potential, innovative sectors like technology, Nasdaq 100, bonds for stability. Thank you for tuning into Next Vault. Don't forget to subscribe for more investment strategies and tips to grow your wealth intelligently. See you soon on Next Vault.